This is the big, beautiful bill just passed on July 4th. Just getting a chance to really go through this, and I found something I thought was really interesting, but was a little too big of a subject to just make a simple post about. These are the Trump accounts, $5,000 that can be rolled over from a parent to a child under the age of 18. And it looks like there will be a way to contribute to the account other than just rollovers. Of course, any of the money going into the account, any money that money makes, is going to be tax deferred. And so this is a really great way to really just increase your tax deferred accounts because instead of you having too much, let's say in your IRA or 401k, you can then roll over those funds to your child. So in effect, that gives you an additional $5,000 a year that you can contribute to your own account because any sort of rollover will be treated as not in excess contribution to your own account, if that makes sense. So to go again, your IRA 401k has contribution limits. And if you go past those limits, there's additional taxes that you must pay. Well, what you can do instead, if you have those additional or excess contributions, you can roll over 5,000 to each of your children. So it's $5,000 each that you can roll over to your children, so you don't have to worry about those excess contributions for your own account. And the money still stays with you because in effect, even though your child is the beneficiary, you are the trustee, and so it's still your money that you control. The other thing that's really cool about this is that it appears that they're going to include $2,500 a year that can be tax deferred from the child's income as well. And so I have a lot of clients that pay their children a W-2 salary, wages. And so what that means is that in the past you were capped at the standard deduction for your children. So whether that's 12,000, 13,000 per child per year. Well, now because 2,500 of that money can be deferred, I think that means that we'll now be able to contribute an extra 2,500 of salary to each child. But I don't quite know if a tax return will need to be filed for the child in order to receive that income deduction. I think there will need to be that. Won't know until we figure out exactly how the IRS is going to administer this. But that's what it looks like right now. Before, you would pay your child, like say 13,000, let's say, and child didn't have to file a tax return. It was very simple, no payroll tax. The most you had to do was send a W-2 to the IRS. That's it. And there was nothing else to be done. Now, if you want to include that extra 2,500, it looks like you will have to file a tax return for the child in order to get that additional 2,500. But not a huge deal. It's just a little bit of paperwork. Whether or not it's worth the additional 2,500 depends, I think, on that person. Let's see what else. The other thing that I thought was really cool was that it talks really and you can see the 2,500 here. The amount may be excluded with respect to any employee. That's the child, not to exceed 2,500. So that's pretty cool. And then that number is going to go up over the years until 2029. I believe all this stuff is going to come up for renewal or expiration. But the other thing I thought was cool was it talked about where these accounts can be domiciled and how and who can be the custodian of these accounts. And it was pretty pretty straightforward. Here's another thing, just real quick. The eligible child. So for the purpose of this section, eligible child means qualifying child who is born after December 31st, 2024 and before 2029. So it looks like only children that are born after December 2024 will be eligible for this Trump account. So any children that are currently living, previous to 2025, won't be eligible. So that's a shame. But again, we'll see how this all gets administered. This is all about the penalties. What happens if you lie? Um, Trying to go back to the domicile. I must have missed it. Fair contribution, confirming amendment, access. You got to make reports. Uh, Here we go. So this is really cool. Um, Qualified geographic area. All right. The following criteria will be considered when selecting the trustee. Now, the trustee is the person who is in control of this retirement account. So typically, let's say you have a job, you have a 401k. The trustee is the 401k management company. Okay, it's legally their money. It does not belong to you, which is why you have to give them 101 excuses as to why you want your own money, because it's really their money and they can decide when to give it to you and why. In this case, for these Trump accounts, the trustee is anyone who has a history of reliability and regulatory compliance of the trustee, has customer service experience, and what the cost imposed by the trustee on the account for the beneficiary is. And so you can have your own 401k, you can manage your own IRA. And it looks like for these Trump accounts, they're going to allow fairly broadly for parents to be the trustee for these accounts as well. So again, what that means is that you have money that's coming from you into this retirement account with as the child as a beneficiary that you will also control, manage, and report. Okay, and so what that means is every year you will report to the IRS how much money is in the account, what happened throughout the year, whether there was distributions, et cetera, et cetera. Um, and again, it gives it fairly broad range here as to who can um, who can be the trustee. I was trying to find. I think there was something else. Um, yeah, there's some verbiage concerning whether or not these retirement accounts are held outside the United States. Um, that can definitely get into some weeds. Yeah, no, that's it. So just those few sentences right there um, made it so that the trustee and the custodian for these accounts, um, like I said, very broad, which isn't any different than what we've seen so far with 401ks and IRAs. But just the fact that this one is spelled out is great because that means that parents will be able to be custodians for these accounts. You don't have to go out and find a management company and this sort of thing for these. You only need to make sure that you register the Trump account, which is a very easy thing to do, and then file a return for it every year. And it looks like there's also going to be reporting requirements for any sort of rollovers as well. And they must be done within a certain amount of time that the rollover happens. So that's it. That's Trump accounts. If I come up with anything else that I feel is too much for a post, I'll maybe just add it to this video versus making a new one. That's it from me to you. I holla.